In the stock market, there are three different forms of panic that can happen in the market. And I want to say this. Currently, we are going through one of those forms of panic in the stock market right now. And I want to show you exactly what's going on in detail so everybody's aware of what's going on. I also want to show you some other very important things that are going on in the market. Obviously, Jerome Powell came out and spoke today, okay? I want to really go through a specific sentence that he said in his, let's call it talk here today, okay? A specific sentence that I don't think a lot of people are paying attention to that I want to show you guys. We got a lot more to talk about outside of just that in this video. It's going to be a busy video. Thank you every single person that subscribed to the channel. And let's get straight into this. Oh, by the way, insane once a year Valentine's Day sale. We do this deal every Valentine's Day and it's coming up. If you want access to that deal when it drops on Valentine's Day, go down to the pinned comment, enter in your info, and I'll send over the deal as soon as that deal drops. It's for basically my two most popular courses ever: Become a Master of the Stock Market course and Dividend Investing Mastery course. Alrighty guys, so let's get straight into this. NASDAQ. You know, one of the forms of panic we actually saw last year, right? Last year was panic from what's called the long side. This is a situation where you get folks that are investing in companies, the longs, right, the bulls, to sell out of their stocks in mass. And that's something we saw last year. It was pure panic. Pure panic. One of the biggest panics you've seen in the past 30 years of being in the markets. In the past 30 years, you've really seen four extraordinary time periods of real panic in the market. One was in the tech bubble when that went pop, okay? The other was in the great financial crisis of 2008, 2009. And the other was March of 2020, which was a super short one. That one was like straight down, straight up. Okay, that was like basically like a 2-month panic, roughly less than a 2-month panic. And the most recent panic that we saw, which was last year, okay? This was a pure panic in the market. You got the NASDAQ to drop over 30% plus in less than a year. That's pure panic. People were selling off everything. And it didn't matter how much the stock it went down. It didn't matter. The greatest of the great companies were selling off 50, 60, 70% discounts. People were dumping these stocks. They didn't care about the price. They didn't care what they were getting for it. It was just pure panic, pure capitulation in the most natural form you could possibly see it in the past several decades. And we saw this in the S&P 500 as well. The S&P 500 dropped 22% plus in a matter of 8 months. In 8 months, a 22% drop in the S&P 500. That's panic in the market, okay? Pure panic was going on, obviously, last year, right? But now we're getting a different form of panic. This is a panic starting to come from the short seller side now at this point in time, okay? And this is the second form of panic. And this is what I'm going to dive into here in just a moment to kind of show you guys what's going on here, okay? And in regards to this, by the way, if you're wondering what's the third form of panic you get in the market, the third form of panic you get, which we're not going to talk about in today's episode, is a FOMO panic, okay? This is when people are just all in the market, they margining out. This is like when you see margin go to like record levels, when you see just like everybody loading up on call options, everybody, you watch CNBC for an hour, and everybody that goes on CNBC is all bullish. They're all saying the stock market's going to the moon, this stock's going up. That's when you're in a FOMO panic. A FOMO panic is actually what we saw at the end of 2020, okay? You saw an absolute FOMO panic into the market. And once again, we're not going to talk about that. That's just the third form of panic, just so you understand. But now at this point in time, we're getting a complete short seller panic now at this point in time. And it's pretty obvious. I mean, you look at the price action today, right? The shorts for a moment there, they thought, oh, we might have it, right? And then straight up into an vicious rally into the last hour or two of trading here today. And these shorts are just having a cover in mass. And these folks are losing everything. And when I say losing everything, I mean everything, okay? These folks have heavily shorted these stocks. And I mean, these folks are down on many of these stocks 50, 60, 70, 80% in the past 6 weeks, folks. In the past 6 weeks. But here's, when it comes to a lot of these short sellers, it's not just good enough to short a stock. A lot of them go put options, okay? So a lot of these people are loaded up on put options that are expiring this month, next month, over the next few months, and their put option contracts are now worthless, okay? Completely worthless. Their options are expiring, time and time again, worth nothing, okay? And so these shorts are getting absolutely obliterated. They're freaking out, and they're starting to panic cover into these positions, which is causing these extended moves in the market on a day like today. Like, the market really shouldn't have been up that big today, but you got panic setting in from the short seller side now at this point in time, right? And this is a big problem for the market. A stock like I own, right? Skyworks Solutions, semiconductor company, up 12.5% here today, up almost $10,000 on this stock, right? I love this company, great company, very well run. Their earnings were not very exciting at all, just to be quite honest, right? But when it came to Skyworks Solutions, here's the deal. The way analysts are starting to look at this, they're seeing a bottom coming in Skyworks, right? Skyworks indicates March is likely the bottom and expects modest sequential growth in the June quarter, right? We're encouraged to see these results. They were largely in line with expectations, given indicators of a bottom. This is an issue. This is a bigger issue for short sellers now at this point in time, because these folks didn't even expect any of these companies to be in a bottomish time. And the fact that now you're starting to have these companies talk about they're bottoming out their businesses over this next 1 to 2 quarters, and they're uptrending from there, right? That gives a lot of these analysts, obviously, they're going to have to adjust price targets. They're going to have to adjust earnings if they believe there's a trough coming here. And these short sellers expected earnings to just get worse and worse throughout the entire year. And they expected a company like Skyworks to report bad earnings Q1, even worse earnings Q2, even worse earnings Q3, and even worse earnings Q4, right? And so they expected things to just get worse and worse and worse. But now we're in a situation where a lot of these companies and the analyst community is starting to flip over to the side that, we're likely troughing these earnings over the next 1 to 2 quarters. If you're troughing earnings right now, then the market, it makes complete sense why it's exploding higher, because the market's always usually 6 months, if not 9 months ahead of a trough earnings, okay? They're all like the market starts to rally when you're kind of, going through a trough in those earnings, right? And the market's usually playing 6 to 9 months in the future, right? And so if earnings are starting to bounce back for these companies in a quarter, 2 quarters from now, that essentially means the market makes 100% sense why it's starting to rally at this point in time. And this is just something like, it's an uh-oh situation. If you're short in this market, look out. That's all I'll say. Look out, because this is not an ideal situation, right? You look at a stock like Tesla. This stock can't be stopped right now, man. I mean, it just seems like it has to pull back, right? And here it is, another $3,400 gain here today in the public account for my Tesla shares, right? But think about it like this, okay? What do you have to stop Tesla right now? What do you have to stop that stock? Their demand is insane now. It's exploding higher. Elon's come out and said margins might get hit a little bit, profitability might. The CFO also said this, right? Margins and profitability might get hit a little bit, but it's not like it's like end of the world by any stretch of the imagination, right? Their demand's insane, even in a weak environment with higher interest rates to sell vehicles. And we obviously know the next 5 to 10 years is a wrap for Tesla. So what are you really going off of now at this point in time? Tesla's balance sheet is stronger than it ever has been before. They're likely going to be still extremely profitable in 2023. Literally, what do you have to go off of? The valuation is still down immensely. Look at the forward P of Tesla. Considering Tesla's growth, its forward P is actually laughable, right? And so what do you have to go off of to try to put that stock down, right? And there was a lot of people predicting that this stock right now would be $50, $60 stock, right? Elon Musk pulls a rabbit out of the hat, obviously, drops price considerably on Model 3, Model Y. The tax credit comes in, demand's through the roof again. Just like that, right? Just another reason why you can't bet against this company. ELF, I was checking out ELF here today, right? Another stock that just can't be stopped. And I was up $3,300 today. This is now my number one winner in terms of percentage, sitting at an 889% win for this stock now at this point in time, right? That's absolutely incredible. It's surpassed Tesla. And it goes to show you that sometimes your biggest winners can come from the most unexpected places. This is a makeup cosmetics company, and it just surpassed Tesla, my Tesla shares, for the biggest percentage gain, right? It just way surpassed all my other stocks, right? Think about that for a minute. A cosmetics company. And it goes to show you can get some ridiculous gains. It's all about, what you pay for a stock. And I paid a very, very, very low price for ELF shares, and the company's exceeded phenomenally. And now I'm sitting on a bigger winner than all my other stocks. And I don't know if that will change anytime soon, to be quite honest, right? Meta can't be stopped at this point in time. Another $10,000 move on this stock here today. $10,000. Every time you think this stock it has to drop, it just shows strength time and time again. These shares are still insanely undervalued. Insanely undervalued. So this is another one of those stocks, like if you're expecting like, the stock to go down, what do you have to go off of? You have nothing. Nothing. We already know they're in a trough earnings period, Q4, Q1, and then it's getting better from there. So there's nothing to go off of on the negative side now at this point in time for Meta, right? Now, in terms of what Jay Powell said today, right, I want to show you something very important. He says the disinflationary process, the process of getting inflation down, has begun, and it's begun in the goods sector, which is about a quarter of the economy. The central bank chief said during the event on, today, obviously, right, a few hours ago. He says, but it has a long way to go. These are the very early stages. Now, this is extremely important because these short sellers, like he just laid it out to you, like this is just him telling the truth, right? We have seen this. This is factual. This isn't opinion. This is factual. We have seen the disinflationary process start, right? So this is good. We're moving in the right direction. But he says we have a long way to go. These are very early stages. And yet this isn't enough for the short sellers. They want them to come out and lie. Literally, short sellers want them to come out and lie. They want them to say we're going to keep raising rates to insane numbers. They want them to do anything possible to get the market down. That's how desperate these short sellers are now. That this man came out and said, we have a long way to go. This is the very early stages of getting inflation down, and that still isn't enough. They want this man to come out and lie just so he can get the market down. That's short sellers for you. It's never enough. He could come out and lie and say, we're going to raise interest rates to 1,000,000%, and they still wouldn't be happy enough with that, right? I mean, it's amazing. It amazes me, the short sellers, in their views on this, right? I mean, he's being as truthful as he possibly can. And he's being, I would say, very, very cautious, extremely cautious. When you have commentary like we have a long way to go and we're in the very early stages, that's extremely cautious. But for the short sellers, it's never enough. They want them to come out and lie, try to destroy the market. So what? Their put options can be worth something instead of worthless like they're worth now? That's the shorts for you, man. They always expected that. Here's Truflation. This is a good way of tracking inflation over time. It doesn't work perfectly with CPI, but it's going to give you a pretty good context of where inflation's trending live in real time, okay? And so this is something I look at from time to time, and it's correlated pretty dang close, right? And obviously, we're in a massive downtrend for inflation. That's good. We haven't won this game yet. We get back in the 2s and 3s, then we can talk about winning the game, right? But, we're doing well. Like, we're making good progress here. We're in the 5s now. We need to get down to the 4s and 3s, and I think that can probably happen over the next few months. Everything is trending in the right direction now at this point in time. So this just gives you more fuel. Another one of these short sellers' dream, okay? One of their dreams is that inflation. This is what the short sellers are hoping for. They're hoping inflation spikes huge again, and the Fed has to come back out and start doing 50 basis point, 75 basis point rises again. That's what the shorts are hoping for in this situation. But the more and more inflation keeps going down, the more and more this is not a realistic possibility, and the more and more likely you are to almost get rate cuts at some point in time, rather than these 75 basis point increases that these bears are hoping for in this situation, right? Now, think about it from this context. I think this is very important, right? If you think about the companies that really drive S&P 500 earnings, okay? These are sorts of stocks that matter the most, right? Big tech, Apple, Microsoft, Amazon, Google, Meta, right? So if we were to just go through those 5 companies and I had to tell you, is their net income going to be down or up in 2023, okay? I think Apple's a maybe. The thing with Apple is it's not going to be necessarily an exciting revenue year for Apple, but they're actually likely going to see some inflationary pressures wane for them. China reopening, supply chains easing up. So it's very possible Apple actually sees margins maybe even potentially go up in 2023. Microsoft, yes, net income up in 2023 versus 2022. Amazon, yes, and probably huge net income rise in 2023 versus 2022 for the full year. Google, yes, absolutely. Meta, absolutely a huge rise in net income and EPS for this company coming in 23 versus 22. So you look at from that context and you're like, oh my gosh, not an exciting revenue year for these companies, not necessarily an exciting year for the global economy likely this year, right? but all these companies are going to have explosive net income and EPS growth. Oh, guess what the market's run on? It's run on over time, as much as the market freaks out about whatever the Fed says, right? At the end of the day, the market's really run on S&P 500 earnings, okay? If we were to take this a step deeper, here's the weighting of the S&P 500, okay? This is the weighting of the S&P 500. So basically what I did here is for the yellow ones, that's basically like it's a maybe whether their EPS and their net income is up or down in 2023 versus 2022. The greens is what I call almost a for sure situation, and the red's probably a for sure down, okay? So for Apple, you got a maybe. For Microsoft, you got yes. Net income will be up this year versus last year. Amazon, yes, absolutely, huge. Google, yes. Berkshire Hathaway, more than likely, yes for Berkshire, because remember, Berkshire has a lot of major investments, and a lot of those investments are already coming back considerably, including Apple stock. So that affects their net income in a massive way. I don't think it should be that way, but that's the way GAAP reporting standards, accounting standards changed many years back. And like I said, I don't think it should be that way, but it is the way it is. And so at the end of the day, look for Berkshire's. Ultimately, their net income and their profitability to go up this year versus last year. Google McDougal, yes, up. NVIDIA's a question mark. I don't know, okay? Real question mark. Tesla's a question mark as well. CFO basically doesn't believe necessarily margins are going to get destroyed or profitability is going to be destroyed, but we'll have to see, okay? So that's why I put that in the yellow category as a maybe. ExxonMobil, I would say probably earnings down in 23 versus 22. That was just an insane 2022, and I think if there's a decent probability their earnings actually go down in 23 versus 22. United Health Group, I think is a maybe. We'll see. J&J's a maybe. Meta's a for sure up huge. JP Morgan's a for sure up. And Visa's a for sure up as far as net income. So this is what runs the stock market. The stocks you're looking at in front of you, this runs the stock market, right? This is all the weightings over 1%. So look what we have. We have a whole lot more greens than we do anything else, right? And the yellows might come in with, more net income this year than last year as well. So if you're betting against this market, right, it's fine if you got a hedge on like I do, right? But if you're truly betting against this and you're not long and you're short over this past few months, this is looking awful for you. Straight up awful. You need miracles now to save you, okay? Kind of like the longs, we needed a miracle to save us last year and we never got that miracle, right? Now on the short side, you need a miracle to save you, man. You're in a lot of deep trouble now at this point in time, right? Now, tomorrow we got some important earnings to come out that I think everybody should keep an eye on. One is Uber. Okay, that's going to be an important one to pay attention to. One is Disney, which that stock just hasn't been able to get out of its own way. Okay, don't be surprised if momentum starts to build back in Disney stock and it starts tomorrow. Okay, don't be surprised. I have no position in Disney. If it goes down, I might be interested in buying it, but I wouldn't be surprised if momentum starts to actually build in Disney moving forward at this point in time, okay? Robinhood's likely troughed their business now, and once again, this is not a stock I own, or am I interested in it? No. But I will say they're likely in a trough for their business model right now, and don't be surprised if they get back to consistent growth starting basically in Q1. I don't think they're going to have any type of crazy, everybody signing up for Robinhood like we had a few years ago, but I think they're going to get back to consistent growth like they used to be prior to the whole, Rona craziness in the market, right? So don't be surprised if they're in a trough period and things get better for them. And ultimately, that's probably going to help out that stock over this next year or two, okay? And then obviously later in the week, as far as Thursday goes, you got PayPal reporting, which I think is a very, very important company to just kind of keep an eye on, right? And you got companies like Pepsi, Kellogg's, those are ones that are going to kind of tell you what's going on with inflation as well, okay? Now, next subject I want to talk about is extremely important. I was actually just posted in the private stock group last night this, because I thought this was just important for everybody to kind of see this, okay? What you're looking at in front of you is S&P 500 over the last decade, okay, over the last 10 years. First off, S&P 500 has done well over the past 10 years. It has, right? 171% gain. That's certainly not the best 10-year span we've ever seen for the S&P 500. We've seen a heck of a lot better than that in the past, right? But, I mean, for a 10-year span, that's good. If you could tell me the S&P 500 goes up 171% every 10 years, I'll take it. It's fine. I'll take it, okay? But the bottom line is here, right? The S&P 500 in the market in general, right? It goes through these time periods of insane bull cycles that can sometimes last 1 to 2 years, and then it can go through another 1 to 2, maybe even 3 years where it doesn't really do much, right? And so I just kind of highlighted a few of these moments where market really didn't go much of anywhere for a 1 to 2 year span, right? Right there. Look at right here. This is a 1 to 2 year span. Market doesn't really go anywhere, right? And recently, guess what? We're in one of those time periods again. When do we hit all-time highs again? I don't know. I wouldn't say probably this year, but I wouldn't be surprised if in 2024 at some point we maybe hit a new all-time high. It's a possibility, not a for sure, but it's a possibility, right? And so we're in one of those time periods again. But you got to understand, the thing that you got to understand about the market, the market's not going to move when you want it to move, okay? In a perfect world, you would see earnings going up, and so at that exact time, that's when the market goes up. And when companies are reporting bad earnings, at that exact time, the market goes down. The market would be so easy if it was that way. It doesn't work that way. It's working out to the future. And the ones that can usually make the most money are the ones that stay disciplined in this game, right? But they're the ones that can kind of see around the corner a little bit. And the ones that are ultimately are the bravest in the market, and they buy stocks when things aren't quite looking all that great, right? And so the market's not going to move when you want it to move. People get very frustrated by the stock market because they want this thing to move when they want it to move. Like, it shouldn't be going up yet. Earnings aren't great. Inflation's still in the 5s or whatever, 6s, whatever they want to say, right? 5s or 6s. The Fed's still raising interest rates. They just raised it shouldn't move up yet. Like, it should move up in 6 months from now or a year from now or a year and a half from now. The stock market doesn't move when you want it to move. Nor do any of these stocks care about what you want. Tesla stock's going to move when Tesla stock wants it to move, not when you want to move it, okay? And so that's a big emotional barrier you have to break through in this game. You can't control when the market's going to move, but when it does move, it moves insane, okay? And like I said, the proof is just out there. Just look at the runs the market goes on. Look at this run coming off of Rona. I mean, that's insane, right? Look at this run that you get coming out of this kind of market dynamic here, where the market didn't do anything for a while. That's a steep run there, right? This run, steep run, coming out of obviously the GFC, the Great Financial Crisis. It was a steep run. And don't be surprised if we go through another one of those steep runs where you're like, oh my gosh, that was quite a run. The market will move when it wants to move, not when you want it to move, okay? Hope you guys enjoyed today's video. Thank you everybody that subscribed to the channel. Also, make sure you check out our massive once-a-year Valentine's Day sale that is coming up. If you want that deal sent to you, we can send it over as soon as it drops on Valentine's Day. That will be pinned comment down there. That is for lifetime access to my Becoming Master of the Stock Market course and my Dividend Investing Mastery course, my two most popular courses ever. I appreciate y'all. Much love and have a great day.